The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen, and welcome to the first Forex Trader webinar. For those who have joined, I know you are going to gain great methods on becoming a successful Forex trader. My name is Timon Rossalimos, and I've been sending out trades actually since early February this year. To start off with, I'd like to introduce myself by reading something I wrote and to tell you what got me into trading and where I am today. First, to tackle some of my qualifications, I have an economics degree from Monash and 5 RPEs registered from the SAIFM. For the past 9 years, I have consolidated my skill set and knowledge base to confidently analyze the markets. Since 15 years of age, my passion has been trading on the stock exchange. I've read every book I could get my hands on and attended more workshops and seminars locally and globally than I can remember. Equipping myself with all these necessary tools to be a successful trader, by 18 years of age, I was already engaging with some of the leading traders in the industry. They shared some great knowledge and testing trading systems with me. To make a trading story short, here are the list of instruments I've traded over the years. In 2003 till 2004, I traded gold. In 2004 till 2007, I traded shares and equities. In 2008 and 2009, I traded penny stocks. In 2009 till 2013, I experimented with warrants. I traded futures, CFDs, and obviously Forex. I'm one of the lucky few whose job and hobby is one and the same. I'm currently a research analyst at FSP, where I write analysis for Money Morning and South African Investor. I'm also the Forex trader at FSP and passionate about assisting enthusiastic traders to bring wealth to their portfolios. I'm sure by now you've seen a few products that I've launched, such as the 5 Forex profit patterns, which is my actual system that I've been using for many years, Forex fundamentals, trading mythbusters, and soon a DVD on the 5 deadly mistakes that traders make. Equipping myself with all these necessary tools to be a successful trader, by 18 years of age, I was already engaging in great leaders, traders in the industry, sharing knowledge and testing trading systems. Fortunately, I received an insurance payout. I partly used it to purchase my first trading software called the London School of Investments. I became excited and did not waste any time, so I opened a trading account with Standard Bank and started trading almost immediately. But in the first year, I recall losing half of my portfolio. A loss triggered a chain reaction of events. I needed to bring some form of preparation and consolation back in my life. So this is what I did. Firstly, I took a timeout and gained as much experience as I could by paper trading. I then read a wide variety of psychology of trading and other related trading books. I started networking with fellow traders. And finally, I got back into the trading saddle once my psychological mindset was reprogrammed to trade. I re-entered the market a year later, and within 6 weeks, I clawed back all of my losses. And after my 3rd year of trading consistently, with strict rules and a system, I started earning a steady and rewarding income trading. I haven't turned back since, and my passion in trading prevails. But enough about myself. So let's get your bulletproof Forex vest on, and let's make sure you never blow your account. The dreaded but inevitable losses. Ladies and gentlemen, there are going to be losses. I know it leaves you with an uneasy feeling knowing there will be losing trades, but this is the reality of trading. There will be uppers and downers, but at the end of the day, you need to realize one thing. It's not about the one trade that will make you a successful Forex trader. It's about the countless trades later. In fact, when I started trading, I felt disappointed when I had a losing trade. But as soon as I made a trading gain, I felt overwhelmed and excited and happy, which is not the right way to go about trading. If you have a winning strategy and a winning system that can weather through most of the uncertain market environments, and you have strict rules and a strategy in place, then trading should no longer be a game of chance. So today, I am only going to talk about 3 vital rules that every Forex professional is equipped with. These 3 rules will save you from your portfolio ever going bust. For the past 7 years, these 3 money management rules are the most essential I've ever come across. Rule number 1. You only need to look at one ratio to save yourself from financial destruction. I'm talking about the risk to reward ratio. It's easier to explain this concept by putting a value on it. So whenever I look for trades with the risk to reward ratio of 1 to 2, basically I'm saying is this: for every 2 pips I make, I'm willing to risk 1 pip. Going back to the USD CAD, which I'll keep doing as it's the most recent gain I've sent out, I told you to put a stop loss at 1.0250. But back at the ranch, I told you there was a caution level of 1.0258. This is the level that I was carefully watching for you. Basically, if this level breached, I would have saved you from a bigger loss. So in this webinar, let's pretend that the caution level was your stop loss. I'll repeat that. The 1.0258 in this webinar is your stop loss. This will make life easier for you. But unfortunately, the specifics of the trade is this. So we got in with the entry level at 1.0273. We got our stop loss level at 1.0258. We put our take profit level at 1.0303. And the second step is the calculation. Fortunately, this is the only calculation that I look at with risk management, and it's the risk to reward ratio. So you take your take profit level and you minus your entry level. You divide that by your entry level minus your stop loss level. Now basically the first part of the calculation is the amount of pips that you are hoping to gain. And the second part of the calculation is the amount of pips you are willing to lose. So simply, you take those levels, the entry level, stop loss, and take profit, plug them in. Once you plug them in, you then have to ask yourself one question. Does it qualify? So basically, when I'm looking for a trade, I look for a risk to reward that is higher than 1.5. I repeat that. I look for a risk to reward ratio that is higher than 1.5. If the risk to reward ratio is lower than 1.5, it's not a good trade. I don't enjoy those type of trades because I call them the low probability trades. But if it's higher than 1.5, basically it's telling me that I want to gain more than I'm willing to lose. So we can go back to the USD CAD and we see that it qualified. As you can see by the entry level, which is the blue line at 1.0273, and the take profit level at 1.0303, basically with the risk to reward ratio, if you want to see it visually, you take the take profit and you minus the entry level. You divide that by the entry level minus your stop loss. Remember, we said that the caution level is our stop loss. So in this trade, it qualified. because the risk to reward ratio was higher than 1.5. And you can see with the yellow that it was 2. Anything less than 1.5, basically you're risking more. It's not really a trade that is worth it. In this case, you can see that I was willing to make twice as much than I was willing to risk. Right. So next thing we got to talk about is that you must not, this is rule number 2, and this is probably the most important rule that you need when trading Forex. Don't risk more than 3% of your portfolio on any one trade. I can't stress this rule enough, guys. You should not be risking more than 3% of your portfolio. Usually, when traders trade, say, 3 or 4 times a week, I tell them to not risk more than 2% of their portfolio. But for you, I'm quite happy with high probability trade setups that you can raise the bar a bit, but keep in mind, you must not risk more than 3% of your portfolio in any one trade. So if you have 10,000 Rand in your account, you must not risk more than 300 Rand per trade. If you have 100,000 Rand in your account, you must not risk more than 3,000 Rand per trade. So now I'm sure you're thinking right now, but I have so much money. Why must I risk so little of my portfolio? Well, guys, there are times where systems go through a month or 2 of drawdowns. You could go through 5 or to 7 losers in a row. When the market is going sideways, no matter what system you have, whether it's a trend system or a breakout system or even a swing system, it will enter eventually into the inevitable drawdown. So I'm saying drawdown so much. What does that mean? Basically, a drawdown is simply when the system starts to make consecutive losses and your portfolio performance starts to underperform the normal conditions. So if we take 7 losers in a row, then that will equate to 21% of your portfolio. Now, trading should be seen as a business. I don't think any business would like to see a rough patch of anything more than 21% of downside. And guys, unfortunately, this is the reality of trading. But you have to remember,
always look on the bright side of life. See? Always look on the light side of life.
keep calm and always look on the bright side of life. Going back to rule 2, basically, you know you're now risking 3% of your portfolio, but then your gains should be over 6% of your portfolio per trade, of course. So if you have 7 consecutive winners, then that alone is 42% gain on your portfolio. In this case, it'll be a 42% gain on your actual portfolio and not on your margin. There is a difference. Now, I'm sure that you can call this a great achievement while trading Forex. And now you know why I do not risk more than 3% on any one trade. Rule number 3, and our final rule for today. Take a breather when the market is not being very rewarding. Take a breather when the market is mean to you. When a new trader has a winning system and is rewarding to them over a few months, over time, the market environment goes through sideways patches, which results in those strings of losses. So they throw away the system, and then they start looking for better systems, which end up bringing even more drawdowns. This leaves the trader confused, with less confidence, and the end result is leaving them with empty pockets. I always say this. Let's see if you can get this, because it's difficult to say, but I always say this, it's better to have 9 years of experience trading one system than 1 year of experience 9 times. So if you have gone through 9 failed systems over 9 years, then basically you have only had 1 year of experience 9 times. Well, I'm happy to have a system that's been rewarding for over 7 years, and I haven't turned back since. But I do know of this inevitable drawdown where my portfolio is down sometimes 15% over a month, over 2 months. So what? What if it happens to you that you go through this drawdown eventually? Well, you can take that breather and relax from trading for a week or 2. But if you still want to keep trading, then simply reduce your position. Cut your exposure by half or even completely. By completely, you must think I'm mad. How can you trade without putting any money? Well, very simply, you can keep track of your portfolio by trading, by paper trading. In the meantime, while the market rectifies itself and goes out of that sideways movement and enters into a more conducive and rewarding environment, which will bring your portfolio sky-high profits, it's part of the trading journey. And I've learned that with patience, discipline, and perseverance. At the end of the day, if you have a winning system and a winning game plan, your portfolio will eventually lead you back into a profitable direction, and you will reach new highs in your portfolio with gains. These 3 rules are absolutely essential with the reality of trading. And this will help you to never blow your account ever again. If you stick to these 3 rules, I can almost promise you it'll be more rewarding than you've ever imagined. This is not a get rich now thing, but a get wealthy but surely. Now guys, if you have any questions with regards to money management and trading systems, you may ask now. Right, I see the first question here. Hi Timon. When I enter into a trade on Global Trader, how do I know which option to trade? I see trade, order, and break order. Very nice question. And very relevant actually to Forex traders. So this is an important question that I'm going to have to tackle. And a few fellow Forex traders subscribers often ask me this question. So it's great that we've gotten this question tonight. So basically on Global Trader, there are 3 options which we call transaction types. The first one on your far left is the trade. Well, not the trade, it's trade on Global Trader. This is where the system or the market will choose the price for you to get into. It's not a specific level that you'll get into. It's a level that the market will give you at any one time between the bid and the offer. This is usually where it gets you in immediately. So you don't have to wait for a specific level. But guys, you have to remember to always put in your stop loss and your take profit levels. Never ever enter into the Forex market without a stop loss, or as we say with jargon, blindly. Never enter blindly into the Forex market. And always put in your take profit level as well. Then the next transaction type, it says order. Now, basically you'll press this when you have a specific price you want to get in, and only once the level is hit will it get you into the trade, whether you're long or short. But remember, you have to put in your stop loss and take profit. I mean, I'm going to reiterate that. The problem with order is that it'll only suffice when the price is trading quite near between the ranges. So I wouldn't suggest you use order. The final transaction is on your right. And this is the one that I recommend. And basically it's called the break order. Between the order and the break order, I was confused at first as well. And I needed some explaining exactly what the difference is. But basically it's this. I'm a breakout trader, so I'm going to use a break order. If you're confident you know the market is trading in a range or it's going sideways, but it's going to break out anytime soon, then you'll use this option, the break order. Because I know that it'll put in the level at where I want to. No matter if it's 20 pips below for a long or 20 pips above for a short, it's going to put in the order. Unlike order, where you need to, where the price needs to be quite close to the bid and offer within, I don't know, 5, 10 pips. I'm not sure. I use break order. So thank you for that question. It was great. The next question I see here, Timon. I attended the seminar you spoke at, and I learned quite a lot about lots and lot sizes. I went back to Global Trader, and I never found anything to do with lots. Why is that? Well, yes, Global Trader is a little different from other Forex platforms. If you take a look when you buy or sell, you'll see an option saying risk. You'll see options of 1, 5, 10, 50, 100, and the other one is 250. Sorry, I had to remember that. Basically, that's to show you how much you can make or lose per pip. So if the euro dollar goes up 5 pips and you set your risk to 10, then you'll make 50. Because you've set your risk at 10 Rand per pip. And 10 Rand times by 5 pips is 50 Rand. So if you have an account of, let's say, 10,000 Rand, and you don't want to risk more than 300 Rand per trade, then you put your stop loss 30 pips below your entry. And if it hits your stop, then obviously your risk will have to be 10 Rand per pip. Because you take 10 Rand, times it by the 30 pips, and will give you a 300 Rand loss, which is 3% of your portfolio. It's very important, guys, that you do all your calculations before you get into the trade. And remember, don't risk more than 3% of your portfolio. And you can set your take profits 6% of your portfolio, hopefully. But anyway, question number 3 is coming in. Dear Forex trader, that's very formal of you. Thank you very much. I was so excited to get into that USD CAD trade in May. Instead of banking 300 Rand, I made a loss of 300 Rand. Can you explain why this happened? Well, first of all, I'm sorry for the news. I've been getting this question quite a lot lately, and I keep seeing the same thing. I'm guessing you are trading YieldX. Now, I've adapted to shorter term strategies ever since February. In fact, since I've joined, I've only adapted to shorter term strategies because that's how I trade. Now, doing shorter term trades mean that the profit and loss in terms of pips is smaller than the longer term trades. So you need gearing and lower cost to do these trades. But if you're using YieldX to do these trades, you'll notice that the spread when you're trading currencies is wider than Global Trader. I mean, much wider, sometimes 50 pips wider. The gearing is lower and the costs are higher. So you probably won't make any trades, you won't make any profits or money on the trades that I send out. If you want to hold a day or a few days, I'd rather you guys not trade YieldX. In fact, I don't see any benefit in trading YieldX with Forex Trader at all. You should use a Forex platform such as Global Trader, which can give you a very tight spread and low cost. making short-term trading viable? I hope that answers your question. Right, so I'm going to try to take 2 more questions. And I see here's a bit of a long question. Hi, Timon. Out of all the hundreds of currencies, why do you only get signals once every week or 2? I see the gains have exceeded the losses, which is great, but don't we get more than 2 trades a week? This is another common question I receive actually. So basically, this is very important. Out of those 200 currencies, I only trade 9 major currency pairs. I also trade it on hourly charts. I also wait for 1 out of the 5 patterns to form, which can take 4 to 5 days to develop alone. The problems with the currency market, and this is very important, is that 70% of the time it moves sideways, and only 30% of the time does a trend. So I wait patiently for the system to line up and for the risk to reward ratio to qualify, and to make sure you'll be able to get in, of course. So when you take into account all those factors, you'll see that the signals are rare, but they are profitable over time. Now, in the last 5 months of adapting to the strategy, you should be up around 100% on margin alone. Your portfolio should be up if you're following all my trades and using 6% risk rule for all your trades. You should have done well. Right, so I hope that answers your question. The last question I'm going to take. Timon, what time frames do you use and what kind of trader would you say you are? Well, the time frames, I guess I said that early up with the gentleman or lady who asked me about the hundreds of currencies. First of all, I only look at hourly charts when trading. So when it's sent out, it will give you about 20-minute window of opportunity to enter, so you can also enjoy the ride. Very often I get in at higher levels than you because I have to make sure that everyone is able to get in within that time. Now, when it comes to what type of trader I am, this is a tough one because there are all sorts of traders. But I'll give you, there's 3 types in this case. So there's an aggressive trader who takes on many losers and winners in a day. There is a conservative trader who really knows how to bide their time and wait and wait and wait and wait for pullbacks once the price has broken out of the pattern. And then finally, there are passive traders. That's me. So I fall under the passive trading category. And basically, you need one thing to be a passive trader: patience. While I'm watching 9 currency pairs on hourly and I'm waiting for my criteria and rules to line up, I also want to wait for the patterns to look good. So they might form, but they might not look great. And I only want to grab high probability trades for you. So basically, in trading terms, we like to say that the pattern is sexier. So basically, a more sexy pattern is where there is a higher probability of it turning out to be a winner for you. If I think it's sexy and it's a popular pattern, which means many people are seeing it at once. I mean, there are millions of traders out there probably seeing the same pattern and acting on it. So at the end of the day, it becomes a self-fulfilling prophecy. So now, what do I mean by self-fulfilling prophecy? This is quite important, is that these patterns I see are not magical and they're not predictors. I can't predict the market. I can probability predict based on the direction of the market. So I don't look for reversals in the market. I don't wait for the point where it's going to turn. I wait for a pattern to form and it confirms that there could be a change in the wind or a change in the trading wind. There aren't magical patterns. So these patterns I like to call logical patterns. So to answer your question, I'm a passive trader. I've been trading 7 years passively, which has been in sync with my personality. I think it's extremely important to find the system that suits your personality and your risk aversion levels. So now, let's just look at some profound wisdom from Malcolm Stevenson Forbes, who was a publisher of Forbes magazine. So first thing, thank you for the questions. And I'd like to end off with some market psychology. So he says, victory is sweet when you have known defeat. Okay? So every trader has been through uppers and downers, as we've said, and they've weathered through storms, and it's been a difficult journey through years. But then it starts to turn around and things start looking good. So victory is the sweetest when you actually know what defeat actually is. Failure is success if we learn from it. This is also very important, because if you make a mistake, you learn from your mistake, and then you do better the next time. If you make a mistake and you don't learn from it, well, what can I say? Too many people overvalue what they are not and undervalue what they are. Everyone in this world have individual brains, you have individual lives, you know different people, you live different places, you have different preferences, and all of this together combines, and it actually makes you who you are. That is completely individual to 7 billion people out there in the world. So just remember to never undervalue yourself. Next one, diamonds are nothing more than chunks of coal that stuck to their jobs. Well guys, thank you for joining me on this Forex webinar. I hope you've all had an entertaining but informative time in this Forex webinar, and how I believe every Forex trader should go about it and become successful. On the 19th of July, I'll be sitting in the Investors Club hot seat, where you can ask me more questions you have, and whichever ones you think will benefit your Forex trading. But I'll be in the hot seat for only 1 hour though. So thanks guys, and let's end off on this note. Have a good night and goodbye.